very good morning to the chairperson, ladies and gentlemen. Let me first introduce myself. I'm Benny Chong, and I have my co-author, Professor Dr. Lai Ming and Dr. Chong. We are from Multimedia University, Malaysia. The title of my study is Does Fund Manager Human Capital Add Value for the Fund Performance in Malaysia? Mutual funds are more commonly known as unit trust fund in Malaysia. So a unit trust fund is a form of collective investment that allow the investor with a similar of the investment objective. They pool their money, they pool their fund to be invested in the portfolio of securities or other asset. Let me proceed with the background of study. Fund risk, fund performance, and portfolio management has been widely discussed in the developed and the developing country. However, most of the investors they believe that mutual fund market has not yet achieved efficiency. So today, the investor they pay the great attention on who are managing and delivering the superior return, especially in their investment portfolio. And limited study have been done on the human capital managerial characteristics with the fund performance, especially in the developed countries. And those developed countries, the study have been done and they obtain the mixed result finding. So the main objective of this study is to examine the relationship between human capital characteristics and the fund performance in Malaysian fund market. Right. So what do you understand by human capital theory? According to Becker 1964, human capital is people cannot be separated from their knowledge, skills, health, or value in the way that they can be separated from their financial and physical asset. So education, training, and health are the most important investment in human capital. And this human capital theory has been awarded the Nobel Prize in the Economy Science in the 1992. Now let me move on to the simples of the literature review. As highlighted by the Gossman and Mori, fund managers who are graduated from the top 30 ranking business school is tend to be higher of the SAT score and they are able to perform better. But surprisingly, MBA and CFA title have negative impact on the fund performance, while Golek and Chivalier Ellison has highlighted that young fund managers tend to gain the higher of the return compared to their counterpart, the senior fund manager. Most of the fund manager they work very hard and perform better, and perhaps it's due to the job insecurities. And Karagianidis, Hans, No, and Roberto, he mentions that the team managed fund have better fund performance for the fund portfolio. Okay, then Barber and Odion in the 2000 and the other researcher has found out that low fractions of female fund manager involved in the financial services industry, especially in the mutual fund industry. And aggressive trading activity has led to all the fund managers able to provide a superior of the fund returns. Now let me move on to the methodology part. Okay, so the study periods is have two main part. Okay, one is a time series analysis and one is a panel data analysis. Okay, so in terms for the time series analysis, the full sample content of 578 of the mutual fund and the study periods is 14 year, which is from the January 2001 until December 2014. Well, another of the parts for this study is simultaneous equations model. And the simultaneous equation model basically is only using 3 years. Okay, the study period suggested by the previous researcher, this study period should not be using the too long period, especially for the simultaneous equations model. And so a recommended of the ideal time frames periods was 3 years. And for the sample fund selections, okay, based on the simultaneous equations, it's only 240 of the equity funds is included in the study. And the fund performance measurement is based on the two measurement, which is Jensen alpha on the single factor, and another performance measurement is the alpha on the pharma and French three factors models. Now let me move on to the result discussions. Okay, so as we can see, for the first one is the descriptive statistics of the mutual funds return performance. And the study have been applied the 5 of the fund performance measurement, okay, which is included the return on the NAV, Sharpe ratio, trainer, Jensen alpha, and assessed return of the 3 months of the treasury bills. Now I proceed to discuss the regression result. Okay, so the discussion will be started with the OLS regression, which is the ordinary least square regressions. And the regressions is find out the fund performance and also the human capital managerial characteristics in terms of single equations model. So as we can see based on the table here, gender, race, education show a very significance in both of the fund performance, and master show negative relationship in the alpha 2 on the pharma and French three factors model, and team manager show positive relationship. Okay, team gender show negative relationship with the alpha 2. Okay, then I proceed to further to discuss the result based on a more complicated of the model, which is the three least stage regressions model. And this is actually based on the simultaneous equations model, which is we run 2 of these model concurrently, simultaneously. Okay, then here we able to see that based on here, we linking the human managerial characteristics with the 2 of the fund performance. So as we can able to see from this table here, gender, race, education, which is consistent with the single equations model, they are also show there is a significant relationship in the fund performance. And as well as, okay, master degree also show negative relationship, which is also consistent in based on the ordinary least square regressions. And team gender here, they show negative relationship in both of the fund performance. So it shows that, okay, the mixed gender in the team fund manager is not very significant. And this could be due to, most probably is in Malaysia, we have a very less numbers of the female fund managers. So that's why the figure here shows that, okay, the team gender is not the significance of the, is the negative relationship, okay. Now I proceed to the discussions and conclusions. Right. So based on the study, the result shows that education, which is the fund manager with the business majoring, could enhance the fund manager their stock picking abilities. That means they are able to perform better when come to the fund performance and fund management. Male fund manager has more confidence and more aggressive, so that's why they tend to perform battles in the fund portfolio. And non-Boomi fund managers tend to outperform their counterpart, which is non-Boomi fund managers tend to be perform better. And while team fund manager outperform and has a superior of the fund picking ability compared to the solo managed fund. So as a conclusions of this study is, okay, this study support the Becker 1964 theory, which is the human capital theory by the Becker, and the fund performance here, the superiors of the return, and this is indicate of, okay, there is a profit opportunity which is exit in the Malaysia fund market. Okay, thank you very much.